Hi, I'm Erik, the CEO of CPA.com, and today I'm with Rohit Arora, the CEO and founder of Biz2Credit. We've been working with Biz2Credit for many years, really helping firms. At first, we helped firms navigate through the pandemic, putting in place a very important CPA firm portal, which supported the PPP loan process.
Yes.
But today, Rohit, we're in a vastly different climate than we were 4 years ago. The interest rates are very high. People thought that we were going to have some reductions in 2024. That hasn't happened. Everyone's doing a lot of Fed watching. So you are quite active in supporting small businesses as well as firms with lending. So how do you see the environment?
So the environment in terms of the interest rates is still pretty, I would say, tough because we haven't seen any Fed cuts. And my view is that we'll not see any cut this year. We'll be lucky to see if we have only one cut of 25 bips at the max. And there are two big reasons. One is the inflation has become very sticky, especially in the services sector.
Mm-hmm.
And the other problem is that, the unemployment rate is low. So that is also adding to a lot of pressure, wage pressure still. So both these things, when we combine, that's adding to a lot of interest burden.
Mm-hmm.
A lot of businesses as well as firms themselves, who are looking to even grow their own businesses also.
So where are rates right now for small business lending?
So very good example is that in the government-led program, the SBA guarantee program, the rates are at around 12% right now.
Right.
And today morning, actually, the SBA administrator made a new announcement that SBA wants to launch a new line of credit product up to $5 million, and the rates will be between 12 to 15%.
Okay.
So if the government guarantee money is coming between 12 to 15%, it's a very clear sign that we are in that environment of high teens right now, and that is something that will persist for quite some time until unless we see a very clear sign from Fed that they're going to bring down the interest rates significantly. That still is not there, still 2025.
Well, one thing that you've built a lot of experience with is working with the SBA.
Yes.
And I know that you've now built integration into the 7A lending process, and you are supporting the number 2 SBA lender in the United States. And this is something that we've also launched and brought this capability to the CPA firm market.
Yes, so we are very proud to build a whole digital end-to-end SBA platform, which we did just after PPP.
Right.
And so much so that one of the lenders, which used to do around 1,000 loans a year, last year did 5,000 plus loans, making them the number 2 lender in the country in terms of volume. We have another close to 25 lenders who are using our SBA platform in the country right now, doing anywhere between 500 to now 5,000 loans a year, which is a pretty big number. What we are seeing is that while the digitization is picking up, there's still challenges around paperwork, and also the rates are very high right now. So that's also limiting the ability of businesses to borrow money under SBA because they need to qualify to repay that kind of money back. But having said that, there's a very clear sign that things are going digital, and more and more banks are going to adopt the digital SBA platform as the rates come down also.
Well, you and I have been talking about this, and it is a climate right now where it's very expensive for businesses to borrow, but it's probably a good time for the firms to be thinking about just putting these capabilities in place, because at times some of the businesses will need financing, and then also at some point these rates are going to decline, and the small business market is going to start reinvesting and looking to grow their business further. So with this digitization, digitalizing this capability into the SBA, let's just maybe talk a little bit about that. Prior to this, this process has been very cumbersome, and a lot of firms have shied away from wanting to support it.
Yes.
But that's different now.
So we are doing 3 things. One, we are making it easy for firms to use our platform more as a software product out there to help them to pre-qualify their own client base by putting all their practice management data running through their financials, looking at who can get what kind of product. Second is whoever pre-qualify for an SBA product, they don't have to fill out any application now. Manually, it's all digital.
Okay.
And then they can also track and see in real time where that application is going. When more document request is coming in from the SBA lenders, they can upload those documents in a secured portal, which wasn't the case earlier. Still, we have been able to reduce the time of funding from 3 months to a month. We are trying to reduce it to less than 2 weeks kind of stuff, but there's a lot of procedural activity that still goes through an SBA loan. Having said that, where we have seen a lot of benefit is automation of the workflow and also streamlining the whole process. So now as a CPA firm, you can assign 1 or 2 people to actually run the process for multiple clients. You can pre-qualify them. The other big movement we are seeing in the market is rise of private credit and insurance money coming into the space. So that's a good news. While banks have shied away from lending to small businesses recently and SBA rates have been very high, we are starting to see a lot of long-term insurance money starting to come in. What that means is that while rates are high still, as soon as rates start going down, we'll see a substantial decrease in the interest rate burden for small businesses, as well as more liquidity coming in. Now that's a good news. The other good news is rating agencies are finally starting to recognize small business lending as an asset class, which they are now starting to rate. And that is a very important aspect because that means that it will become a mainstream asset class. And my view is that over next 2 years, that combined with the advent of AI and the ability to mine through a lot of financial data, analyze it, makes it very pertinent for accounting firms and CPA firms right now to start thinking about their strategy of how they will service their own clients, because it's a matter of time with AI, with productivity increases, with digitization, and as soon as the interest rate starts going down and availability of alternative capital, long-term capital now, that's going to lead to a lot of pent-up demand, which is coming up, and my view is that 2025, 2026 should see a lot more activity in this space than compared to 23 or 24.
Well, you and I, when we were working together during PPP, we said, let's build capabilities to be ready to support the firms. Yes. And this was when we were talking about the second phase of the PPP funding. And I think right now, these capabilities, which you've been working on for the past couple of years, and they're live now.
Yes.
The exciting capability regarding 7(a) lending, but you also have got other offerings which are becoming more valuable based on some of these private equity and insurance backing.
Yes.
So then that's going to continue to evolve. So I think what we're trying to communicate to the firm market, we're doing that at some conferences this spring, is to be aware of this and to start thinking about really putting this capability in place so you can play the trusted advisor role. And AI, I think you're right. AI is going to also offer elements which will make this, the financing potentially get to better rates and also be more strategic from an insight standpoint with the firms.
Absolutely, because I think what firms are sitting is on a treasure trove of data,
right,
which they can use not only for financing but also for portfolio monitoring and management. Right. That will lower the cost. That will also increase the capability around risk management. That will also increase the capability around rating these assets. Because the more we can think about it, the more we can do it, it eventually will, more mainstream money comes in. And that also means that there's going to be more liquidity. That also means that, effectively interest rates will go down. But the biggest thing is that it also means a lot more money comes into this market. Because the biggest challenge for small businesses over the years has been they're underserved.
Right.
So cost of money is one thing, but just getting access to capital has been a big challenge. What we are seeing is by doing this stuff. So one of our vision is that over next 2 to 3 years time, most of this financing will become an embedded finance kind of a concept where as a business owner, I don't have to come and apply for financing, based on the financial parameters, the needs, the evolution of the business, the businesses will be able to get almost like pre-qualified offers, directly. That reduces the cost of doing business. That also reduces the risk. That also reduces the ability to deliver the credit at the right time at the right place. So that clearly means that even if interest rates are a little bit on a higher side, these other efficiency play will really help both the firms and the businesses. Because the biggest challenge for firms today, CPA firms, is manpower. They don't have trained people, even to do the normal accounting, tax filing work. So for them, if they're using technology, AI, and they are sitting on so much of data, and they can actually use that, that's going to be a massive uplift for their own business and the value add that they can provide to their clients. Because clients are looking for insights, clients are looking for that value add, which today trying to provide it in a manual fashion is extremely expensive and not really scalable.
Well, I think, Rohit, that's a fantastic conclusion. And these things take time.
Yes.
And I think that's what your team has done, is advance these capabilities. And one just final comment about this overall ecosystem is that I really think it's the and story. This isn't like work with a leading kind of fintech player to kind of put these capabilities into the firm and not work with banks. It's actually, this is the bridge to the banks, and this is the discussion that we're having with the firms, that they can actually empower local banks, other national banks, and that's really what this is all about. So this is a very strategic capability for the firms to understand, better support their clients, and also actually to bring in the banking community.
Absolutely, the banking community, the insurance money,
right,
the endowment money, which wouldn't have come otherwise. So like we have to think broader. Banks absolutely central to this, but other long-term availability of pools of capital which can now be brought in.
Okay, well, thank you. Look forward to continuing this discussion.
Thank you.